Hedge Nordic, your single access point to the Nordic hedge fund industry.
To start with, how do you describe your fund, Antiloop Hedge, to investors?
The elevator pitch is that we are offering an alternative investment stream or return stream to investors that has a very small or no correlation to the stock market. We have 8 different strategies, but they have no correlation to each other, and we can do that by investing in different assets in different markets, employing different time horizons, different types of strategies. Some of them are more technical, some of them are more fundamental. So I think the overall correlation between all these strategies are basically 0.
Yeah, but also to say that they are all sort of formed from a bottom-up approach from each individual portfolio manager that has used this strategy before, and is sort of his expertise or her expertise. And so it's not that we sat sort of top down and thought, oh, we need 2 long-short equity, we need 2 tactical asset allocation strategies, and so on. It's more a bottom-up approach where the strategies are sort of stem from the portfolio managers themselves. And then we realized that it would be a good fit to put them all into one multi-strategy approach, but they all come from the managers themselves.
What's the team behind the fund right now? How many people are you?
We're 5 fund managers now. So we have, it's really interesting because we are 5 people with very different approaches, very different ideas of the market. We have like the same market values, I would say, because we are very similar in thoughts of mine when we're thinking about monetary policy or inflation and what kind of assets that we believe in long term. But how we approach the strategies, that's very, very different. So Martin, for example, you have over 20 years experience of this industry, and the same with Karl-Mikael Syding, also 20 years experience of running a hedge fund. And
but completely different. I mean,
exactly.
I ran Lynx systematic CTA strategy, so I gravitate more towards technical and systematic approach, and Vicky has more a fundamental approach. So exactly. Yeah, very different.
Yeah. And then we have two traders also.
But you mentioned you're running two strategies only. Can you walk us through them?
Yeah, so it's my strategy. It's called Tactical Asset Allocation US, or Cygnus, as I call it. And it's an allocation strategy where I allocate money between the S&P companies, gold or precious metals, and soft commodities. So depending on the relative value between different asset classes, I decide an allocation. So for example, now we are pretty heavy to soft commodities, which has been really, really good the last few weeks. And the thought behind the strategy was to make drawdown much, much smaller than if you would only invest in, for example, the S&P 500. So that's one of the strategies. The other strategy is Mike's strategy, so that's long-short equity fundamental. So he's doing like industry spreads, basically. The strategy is market neutral.
When do you plan to roll out the other strategies?
So it's going to be within a couple of weeks. The whole point with the soft launch and not raising more money in the beginning was to be able to, we really see this as a marathon. And we want to make sure that we actually grow into it, and that everyone is, that all the strategies are working together as they should. So that's why we haven't been that stressed. I think it could have been a big mistake to roll out everything at once without really testing to see what works and what doesn't work. Now you have a lot of experience from this before, and you've been running your strategies for a long time.
Yeah, but it was a good start with Anna's and Mike's strategy because they're very long-term, not trading intensive. So we had a chance to try out everything, all the connections with the brokers and everything, just to see that everything's working with the risk calculations and everything, NAV calculations. So it was nice to sort of start with those 2 strategies because the rest are more trading intensive. So yeah.
Yeah, so we're going to roll them out very soon.
So looking ahead, when you have all the strategies implemented and up and running, on what basis will you determine the allocations to each of those strategies?
The goal is to have equal weight between all the strategies, because I think it's my experience from running Lynx is that it's very hard to know which strategy is going to do well. So the goal is to have equal weight, and But the two short-term strategies will have a lower weight just because they're harder to scale up in the future, and yeah, so that's the only difference. But otherwise, just try to have as equal weight as possible. Then, obviously, depending on how the performance is, we might decide to increase or reduce weight in the future.
Mhm.
There's also, since these strategies have no correlation to each other, some almost negative correlated, we are discussing whether or not in some market climates we should allocate some more to some of them that are working better in those specific climates, but we need to test them first and see.
Mm-hmm. But looking at the entire range of strategies that you have and you are developing, which one do you expect to contribute most to performance in the long term?
It's very hard to say. I mean, obviously, it's that's why you have a multi-strategy approach, because you just don't know. So time will tell. But hopefully, they will do. And what we've seen so far, we've tracked the performance, but going back also like a year, and they tend to do well at different times. So sort of working together to perform a stable return. That's the goal. So. Sometimes one strategy does well, and yeah, they sort of have this property of doing well at different times. So that, yeah, but we don't know going forward which is going to do better.
Yeah, and that's the whole idea behind the fund as well, to deliver like just an absolute return.
What do you tell investors? What do they expect from an investment in your fund? Do you have any return or Sharpe ratio targets?
Yeah, we aim for Sharpe above 1 and double-digit returns, so around 10-15%. Yeah, Sharpe 1.5, I guess, would be our target, but we're happy with Sharpe above 1. But so slightly higher risk than normal multi-strategy funds have, because I think in the end people are more interested in the returns and they forget about the risk, and also. We have the view that inflation is going to pick up, so you're going to have to deliver returns just to stay ahead of inflation that are sort of substantially above zero or above, a couple of percentage points.
Hedge Nordic, your single access point to the Nordic hedge fund industry.